Good morning, good afternoon, good evening, everyone, and welcome to another FP&A Trends webinar. Today we are going to talk about FP&A roadmap, how to master rolling forecasts. My name is Larissa Melnichuk. I'm Managing Director of FP&A Trends Group, an international FP&A board. And today I'm going to be your facilitator for this webinar. Just a quick reminder that we have over 600 registrations from altogether 65 countries around the globe. The majority of registrations came from APAC region. So this is a truly international panel and truly international webinar. And a quick reminder that the mission of International FP&A Board and those webinars is to share with you the latest trends and developments in modern financial planning and analysis. Just a quick reminder about today's agenda. Rolling forecast, what are the 3 stages of maturity? Then evolution of forecasting process at Maersk Group, how to move from traditional to moving to rolling forecast. Then rolling forecast as an instrument to optimize decision-taking process at SBB Cargo. A reflection on rolling forecast experience, and then conclusions and recommendations. Obviously, Q&A session as well at the end of the session. And now this is a good time to invite our international, very experienced panel to switch on the cameras, and I will do a very quick introduction. Matthias, Stefan, Eric, you're welcome to switch on your cameras now. Let us start from Matthias. So Matthias is a CEO for Europe region at Svitzer, which is the part of Moller Maersk Group. Matthias has a very international experience that he obtained in Asia and in America, in Europe, in different parts of Europe. At the moment, Matthias resides in Copenhagen, in Denmark, and he's also an ambassador and a member of our FP&A board in Copenhagen and presented on a number of occasions. Experience in rolling forecast, experience in beyond budgeting, a lot of experience in analytical transformation as well. And today Matthias will share with us experience at his company, so how they moved from traditional to rolling forecast, but also some touch base on beyond budgeting as well. Matthias, you're welcome. Welcome to the webinar.
Thanks for the very kind introduction. Happy to be here.
Thank you, Matthias. Stefan Spiegel, who is CFO at Swiss Rail SBB Cargo, joining us from Zurich, Switzerland. Stefan is a member of our FP&A board in Zurich, also ambassador, a member of our artificial intelligence machine learning committee. A lot of experience in finance and actually on some areas that are in between of finance and data. So Stefan is not only experienced CFO, but also he has a degree in physics, and he learned organizational behavior and data science. And he's using his innovative approach in his finance job and leading analytical transformation in his company. And today, Stefan will share his experience on beyond budgeting in his organization, a little bit on beyond budgeting, but mostly on rolling forecast. Beyond budgeting experience from previous companies, Stefan, yeah?
Thanks.
Stefan, you're welcome.
Thanks, Larissa, very much. Hello, everybody. I'm happy to be here with you.
Thank you so much. And then we have Eric Chung, who is joining us from Singapore today. He's CFO Asia at Unit 4, our sponsor company. Eric has a lot of experience at different technology organizations, and Eric is very passionate about what technology can bring to the table. And today, Eric will share with us his experience on starting to implement rolling forecasts in his organization, but also reflection on his previous experience in different technology companies as well. Eric, you're welcome. Welcome to the webinar.
Thanks, Larissa. Good morning, good afternoon, good evening to everyone. Glad to be here.
Excellent. Thank you so much, panelists. So you can switch off your cameras while I'll do very quick introductory presentation. Let me remind you a little bit about FP&A Trends Group that I'm heading. So with travel with International FP&A Board, we currently have 27 chapters in 16 countries on 4 continents. At the moment, we are traveling digitally, but hope to restart traveling and face-to-face meetings from July in Asia and Australia, and definitely in the second half from September to December in Europe. Just recently, we also opened best practice workshops and consultancy company. So if you have anything that we can help you with, please, you know how to find us. A little bit about the webinar. 1 hour, your participation is welcome. We will have 2 polling questions, and you can start asking questions straight away during or after the presentation. And please use the chat box, very user-friendly, easy to use. Presentation is available right now as a handout. You can download it, but please remember that your recording of this presentation and copy of the presentation will be sent to you within 2 days after the end of this presentation. And of course, we are welcome your feedback after we finish the webinar. It's very important for us to know how we can get better. And before we start, I would like to say thank you so much to our today's sponsor, Unit 4, one of the world's leading provider of powerful corporate performance management solutions with rich business intelligence to optimize FP&A function. Unit 4, thank you so much for your great support. And just a few slides to set the tone for this today's meeting about the rolling forecast. You know, we've had those discussions about rolling forecast practically in all of those 16 countries in 27 chapters. And what is interesting that one of the biggest problems why it doesn't work is that sometimes companies use interchangeably different planning methods. You see, plan, target, and forecast. And I would like to start with this a very quick introduction. So while it's necessary for us to have a plan, then the world is often very unpredictable and very different to what we expected. And from this point of view, the first thing that we need to work out is where we are heading. And this is exactly what is the forecast. So where we are heading with all of those changing conditions. And of course, then what we have to do differently to get back on track, and this is the targeting. So before we start, it's so important for us, for the matter of this particular meeting today, and also in our organizations, to understand the differences between plan, target, and forecast. And another thing that I would like to remind you that a forecast, it's the management tool. It's not the corporate performance measurement tool. And this is the example of rolling forecast. Obviously, it's not ideal. It also has own limitations, but obviously rolling forecast has more opportunities and has more opportunities for us to go beyond budgeting to better budgeting and actually be flexible and dynamic than traditional forecasting when we stop everything at the end of the year. And when, for example, in traditional way, we forecast only 1 quarter at the end of the year. So rolling forecast, in this case, you can see how we roll the next 5 quarters over the year. So it doesn't matter when the year end is happening. And also, I would like to share with you very, very briefly this rolling forecast maturity that was developed by International FP&A Board. You will have those slides, you can evaluate where you are exactly. But just to give you a head, what are those success factors? And obviously, this is the advanced state. In order for us to be flexible and dynamic and collaborative, rolling forecast should be driver-based. It should be a management, not measurement tool. Ideally, it should be the only forecasting process, not several traditional and then rolling forecast on the top of this. It should be the balanced level of detail. It should be high collaboration between different people using advanced analytics, automated processes, flexible FP&A system that integrates all the efforts, and of course, agile and integrated planning process. So very quick introduction. And another thing that I would like to remind you that obviously rolling forecast, good quality rolling forecast, it's a good starting point for better or beyond budgeting as well. And we will see it today. Now it's a good timing for Matthias Schott, CFO Europe region at Svitzer, to share the experience on evolution from traditional to rolling forecast. Matthias, you're welcome.
Thank you, Larissa. Let me take the next 8 minutes and try to share with you the experience that we had at AP Moller Maersk, moving from traditional budgeting to kind of a rolling forecast over the last 10 years with the ups and downs. But first, let me introduce a bit the company so you understand where so on the next slide, you will see kind of the global network that Maersk has. So most of you probably know Maersk from the container ships that we have. We are actually an integrated logistic provider in more than 100 countries across the world. And as you can see from the network, you can imagine, as kind of Larissa did with her example of the sailing boat, that there will be events that require us to change the network. So we have to be, from the nature of our business, quite dynamic around this. Yeah. To start off with the next page, I would like to kind of give to you the journey that we went through. Before we started with the rolling forecast, we had a kind of a de facto planning process, as I think you will recognize from a lot of you in your own company. So we had a detailed budget by calendar year. We had kind of a strategic capital allocation for a 5-year plan, and we had kind of multiple revisions of our budget, which was quite resource intensive and also took a long time to prepare. Then we had monthly reviews against that budget, but it was all limited on the calendar year. Right? Some of the shortcomings of that are inherent, right? So I think one of the most important shortcomings of that process is that you're actually trying to mix several things into one number if you make a budget. You're trying to create or mix, an ambitious target setting number that you want to inspire people to outperform. At the same time, you're mixing it with a realistic forecast that you want to have for your capital allocation, for your resource allocation. So trying to mix that, you will not get any of those things. Secondly, you get also a very slow adaptation to market conditions because you're only looking several months ahead, and you kind of keep measuring yourself according to the same budget. As I mentioned, it's also quite resource demanding to do kind of a detailed bottom-up process and give people their budgets. The next thing is also it's very inconsistent visibility because you're only looking at a calendar year, so your horizon of where you're looking forward to is decreasing as you go by, and then you could miss very important trends that you're not seeing that would allow you to kind of change your company and make different decisions. Yeah. Our next speaker, Stefan, will talk about that more as well. And then, yeah, you're missing kind of not enough structure to make these investment decisions. If we go to the next page, then I can explain to you what we were actually solving for. So together with Beyond Budgeting, we kind of looked at our existing process and what we wanted to really achieve with our new process. So we wanted to have a better visibility, so a longer forward-looking period to be able to identify trends and act on those trends. We wanted to be agile so that we could, when we recognize trends, that we could actually change our company and make the changes necessary to improve our performance. We wanted to still have some control with balanced scorecard driven process to be able to measure the performance of our people and reward them. And at the same time, we also wanted to make it more simple to remove kind of unnecessary details and effort that we had. So those were the things we set out, and then we worked on a process inspired by the Beyond Budgeting group on designing that new performance process. I will focus on kind of the financial forecasting process more. The other speakers will focus a bit on other areas, right? But it goes throughout your company, of course. On the next page, you'll see kind of the process that we ended up with. This is the financial forecasting process where we had. So we started off with kind of the process on a quarterly basis. We do a 5-quarter forecast. And then, we have macro assumptions to ensure that everybody starts off with the same assumptions across the different businesses. We then have an internal forecasting process. We then consolidate the financials. We create kind of management views on those financials, which I think is important to make sure that we are all looking at the same numbers with the same assumptions baked in there. Then we have these quarterly reviews where we then look at and review the performance compared to where we thought that we wanted to be, and the changes that are occurred in the forecast. We then take kind of action items based on that, and contrary to a budgeting process, you won't go back and change the rolling forecast. You will just implement the changes into the next one. Yeah. So to move to the next page, there are some kind of success criteria to doing the implementing it successfully. So some of the success criteria on the next page, you can see that there really has to be a need to make a change based on kind of your company where you are. Either through a kind of an economic crisis or a competitive pressure or a change in macro environments. For us, it was very clearly in 2010, after the global financial crisis, that created so many market swings in our environment that our current process or our de facto process was not working anymore. Yeah. If you go to the next page, I've listed some of these key success criteria. So it's great if you have a need to make a change. Otherwise, it's very important to identify, what the benefits could be, right? Like I said, the global financial crisis was an accelerator for us. But what we've seen now with COVID in the last year could also be very clearly a catalyst for your change, right? Then it's super important to have executive sponsorship and management buy-in. Because it's not just only kind of a process or a forecasting process change, it's also a mindset change, right? To get away from having one fixed number and having that as the truth for 12 months, but allowing for the company to change the number, for empowering the people that they use, their best insight that they have to set up the company for success in the best possible way. So it's a mindset change that the management has to have buy-in. And over the 10 years, we've seen kind of also our buy-in in this kind of increase and decrease based on kind of management changes. It also requires you to decentralize, to allow for better decision making, where people have more insight on this, right? And it helps if your company is in a volatile market or business, because that actually creates kind of a higher need for having a flexible process. If we go to the next page. So what have you seen as the benefits? So we've seen kind of this increased visibility by constantly having a horizon of 5 quarters, and it depends on your business what makes sense. If it's 5 quarters, 7 quarters, depends on the speed of how quickly you can change your business. We can see that we have also improved our performance discussion. When I say that 30-70, I mean we only backward-looking 30% of the time, and then forward-looking 70%, because that's the actual results you can impact. That's the future you can define. And then we've become better at kind of decision making and acting on trends as we see them happening. We also set up better targets based on our forecasting process, and then can also allocate our capital in a much better way that allows for flexibility and changes. And then I think overall people will feel an increased amount of autonomy and ownership instead of having fixed budgets that have a lot of flexibility. So this is what I wanted to share with you on the journey that we went through. I hand it back to Larissa for the polling question.
Matthias, thank you so much for walking us through your rolling forecast journey. Definitely a very valuable experience, especially taking into consideration that only from 15 to 20% of those companies that implemented rolling forecast, I really realize a value in rolling forecast. So the value realization is really very low for the reason that not all the factors are taken into consideration. So thank you for sharing. Now I would like to ask Stefan and Eric to switch on the cameras, and we will start a quick commentary, a quick discussion. First of all, Stefan, what would be your addition to this presentation, your commentary?
Yeah, so thanks very much, Matthias. I'm always really impressed to see how at Maersk the top management has supported such a transformation from switching from classical budgets to rolling forecasts in a company that has such a tradition like Maersk and is such a global player, and I think it's really important to have this support from the top management to go in that direction.
Thank you, Stefan. And Eric, what would be your addition to this presentation?
Yeah, thanks, Matthias, for sharing. I think it's quite inspiring in terms of getting the practical rollout of the rolling forecast. I think according to the industry average, I think it's only 42% of the company has successfully rolled out the rolling forecast. So it's kind of inspiring that we actually see some great success example. Not talk about in the region, but I think, yeah, for Asia Pacific will be relatively low in terms of the company that are adopting. So it's great to hear a success story.
Thank you so much, Eric. Now this is a good timing for us to start the first polling question in order to understand what is happening with rolling forecast experience in your organizations, what is happening in your world. I'm launching the poll, and please can you start to vote as soon as you can. So what is your rolling forecast experience right now? We have implemented rolling forecast, it's value adding. We have implemented rolling forecast, it's not value adding. We are planning to implement rolling forecast in the future, or we do not have plans to implement this rolling forecast at all. So please, if you can continue to vote, it would be really interesting to see what is happening in your companies and what is your experience. More than 55% of you voted, almost 60%, just a few seconds. Please continue to vote. I'm closing the poll right now, and I'm sharing the results. And actually quite pleasing results. I'm really surprised. I can see that the world has changed and it's shifted towards value-adding rolling forecast, because 43% of you already implemented, and definitely it's value-adding. Only 4% said that implemented and it's not value-adding. 36% of you are planning to implement in the future, and 17% never implemented and don't have those plans yet. I would like to ask Matthias to comment on this experience, on this statistics. So what would you say?
Yeah, Larissa, I'm also a bit surprised and happy to see that there's so much interest in rolling forecasts, right? And a recognition that it is value adding.
It's definitely improving, because the previous statistic that we had before COVID, it was definitely different. Thank you, Matthias. Stefan, what would be your commentary?
Yeah, I also think it's perfect to see this development. and perhaps even COVID pandemic helped to give a push here, just as one saw that having made some budgets are quite useless.
I'm especially pleased with this 43% about the value adding. It's definitely the shift comparing to the previous years. So thank you so much for your commentary, and thank you everyone for voting. Let us start the next presentation about a rolling forecast as an instrument for your management. Stefan, CFO at Swiss Rail Freight Logistic, SBB Cargo. Stefan, you're welcome to share your experience with us.
Thank you very much, Larissa. I want to focus on the next minutes on the practical side of implementing rolling forecast as an instrument to optimize decision taking. On the next page, I start with an example of stock market. Namely, what I show here is Wirecard. This is a former DAX member, a very famous member. The DAX is the leading German share price index. What you see is that the share price showed a tremendous rise from 2015 up to 2018. Then it went slightly down till 2020. And at June 18, you had a totally crash of the share price. What was astonishing is that already in April 2015, Financial Times reported about inconsistencies in the balance sheet. But it took 5 years up to German finance authorities, the BaFin, started and accused the Wirecard management. Police started investigations, and at June 18, Ernst & Young refused test date. After that, the share price crashed. So if you look at that development, if you were an investor in Wirecard, it would have been very important that you have a clear goal. For example, you say, I want to at least have 50% gain, but not more than 20% loss. If you want to reach such a goal, what is really obvious and natural is that you check things like stock price development, company news, market environment. You check such things on a rolling base to take your decision for buying or selling the stock. In that example, it would have been enough to check the things every week. So you would have had enough information to sell the stock before June 18. On the next page. On the other side, if you would have followed as an investor just a budget philosophy, let's say you set a yearly target of 10%, you report deviations. If you follow such a philosophy and you look at the year 2020, from the 1st of January up to the 17th of June, you see a small reduction of share price from 3.4%. So this is not a dramatic development. It's just in a normal range. So you wouldn't have had any indication to sell your stock. So just following a budget way, you have much more, your risk is greater to lose all your money you have than when you have implemented rolling forecast. So on the next page, the learnings of this example is you should have clear overall goals. These goals are fixed over time. They are not depending on market conditions, so they stay stable. This is by the way how you implement beyond budgeting goals. You have a clear decision focus. This is buying or selling a stock, and then you have to establish a natural rhythm to update the rolling forecast based on the decision you want to take. Here, as I told you, for the stock market, this was on a weekly basis. You also have to adjust the frequency of your decision-taking meetings. If you make a rolling forecast, you always have to implement also a decision meeting. Otherwise, a rolling forecast is useless. You have to identify all your drivers, stock price movements, company news, market environment. You have to update all your drivers in the forecast process. And what is really important, if you have many stocks, you cannot do it all by hand. So it would be very helpful to automate the processes. And not every stock, for example, needs the same checkup rhythm. So these are the learnings we have out of this simple Wirecard example. Perhaps you are also investing in stocks, so you know such an environment. On the next page, we switch to our company, SBB Cargo. You see here our delivery network within Switzerland. We have a clear goal. We want to adjust our resources to the volume developments, and we want to do it as accurate as possible and as fast as possible, just to have a good profitability. So on the next page, you see that our focus, our decision focus is clear. What about our natural rhythm? How did we implement it? On a weekly basis, we make sales updates on actual gains and losses. And then on a 2-weekly basis, we have short-term resource adjustments based on the sales update. On a quarterly basis, we make midterm adjustments of the whole network, including changes of pickup and delivery times at our client side. So on a quarterly basis, we address our clients to switch, for example, some delivery times. And on a yearly basis, we make long-term adjustments by buying, renting, selling, hiring, and dismissing resources. So we have our natural rhythm. The drivers are the market environment, client performance, and client decisions. Of course, our clients can decide to switch the provider. So we have to know it, as we can plan, as we can decide it a little bit before. And what we also see is, to be as accurate and as fast as possible, we need a very high granularity in this process. So we need the information in a very detailed form where the volumes are changing. So we need here an automated process. We need machine algorithm. So we need here helpful tools that support us in doing our forecast. On the next page, here I show you the example of our long-term capacity adjustment. So we do our long-term forecast, our long-term rolling forecast on a quarterly basis. What you see here was the forecast done by November 2018. What you see is that we have a forecast that said that our volumes are dropping by 20 to 25% in the year 2020. So this forecast was done more than 1 year before COVID pandemic started, and it gave us the insight that we could take our decisions in the right way. So it is very important. But what I want to show you also is that this insight, we got it by looking at the forward period of 4 years. So we didn't just take a forward-looking period of 12 months or 18 months, but we look forward by 4 years here in the long-term capacity process. If we wouldn't have done it, the forecast would just say, okay, it is a development like in the year 12 and 13, so no problem. So we didn't have to adjust our resources. But looking a little bit further and making forecast assumptions, then you see that the volume could drop, and therefore you can take at the time and at the right moment your capacity decisions. So this is an example how important it is, based on the decisions you want to take, to adjust your parameters, to adjust your forward looking periods. On the next page, we also actually have weaknesses in our process. The board of directors, for example, still want to have a yearly budget, so they are very traditional. They don't support us, like in the Maersk example, to move the whole company in the direction of only using rolling forecast. The flexibility of our workforce due to labor contracts is at the moment lower than the agility of our forecast process. So of course, as agile as we can forecast, we should be able to switch or to change our resources that at the moment we have weaknesses. And of course, we don't have all information from our clients. They don't tell us everything what they are planning to do. And the automation of the forecast process is just at the beginning. It's still some elements that are done by hand. So I'm at the end of my presentation. I thank for your attention. I want to show you how natural it is to use rolling forecast for taking active decisions. Thank you very much.
Stefan, thank you so much. What a great presentation for demonstrating the benefits of rolling forecast as a supporter for decision making. Definitely also this is the first step for improving the budgeting process, or even going beyond the budgeting. I would like to invite our other panelists to switch on the cameras and to make a quick commentary on this. Matthias, any additional thoughts from you on this presentation, please?
Yeah, thanks, Stefan. I really like your presentation. There's also a very clear example, I think, of the the wire card that you use on looking at your horizon, and it makes it super clear, right? I think if you use one of these analogies that people can understand, it's kind of a no-brainer that there's big advantages to rolling forecast, right? I think we both work in very businesses that require constant monitoring and are very dynamic and need to be changed constantly. So, and that's why I mean as well that our financial planning should be very similar as well than to have that with the business, right? So, a very good presentation. Thanks.
Thank you, Matthias. Eric, your subject matter on this presentation, please.
Yeah, thanks, Stefan, for sharing. It's interesting to see, to link, I think, rolling forecast from a listed company from an earning and future stock price perspective. I think, the rolling forecast definitely provide a structured basis for the outward forward-looking statement. So I think not before long, I think the analysts would probably start tracking all the listed company, which one is using rolling forecast to conclude with their future earnings, and that would be interesting to see.
Thank you so much, Eric. Thank you, everyone. Now this is the timing to hear from our audience, and I'm launching the next polling question. And it's a very interesting one. It's not exactly about rolling forecast, but we always call this a key performance indicator of your planning and forecasting process. So we would like to understand how long is your current forecasting process, whether it's rolling forecast or your traditional one, or maybe both, if you use both. So select one of those which is the best description for you. Is it less than 1 day? Is it from 1 to 3 days? Is it from 4 to 7, from 8 to 14? Or maybe it's more than 2 weeks, more than 14 days. So please, can you continue to vote? More than 60% of you voted. Just a few seconds, and I'm closing the results and sharing those answers with everyone. Only 1% of you really have this process which is less than 1 day. 16% of you from 1 to 3 days. 20% of you have process that is from 4 to 7 days in duration. 26% from 8 to 14, and 37% have this process that is more than 2 weeks. I would like the commentary now from our panel. Stefan, what would be your commentary?
Yeah, I think it's a very natural answer to this question, because you see that the time that elapses, how you do after you have done the forecast, it rises. So the most of the companies have more than 14 days. But what is interesting, there's just some companies, less than 1%, that have just 1 day. So I think this would be my dream. So you just have an app on your smartphone, and every business manager at the end of the day just has to push some buttons, and your forecast process is automized, so that you have every day, for example, an actual forecast in a very easy way. So this would be a dream. So just that you have always and at time new information to your company.
Thank you so much, Stefan. Eric, what would be your quick commentary on this one?
Yes, I think that's aligned to my understanding in the market as well. I think that question really depends on whether the company is adopting, a software or technology to help you, because obviously that would drive how long you're taking that forecasting process. So, but yeah, that basically, I mean, 37% indicating that I wouldn't be surprised.
Thank you so much. Thank you so much, Eric. Thank you, Stefan, and thank you everyone for sharing your experience. From my side, I would see that It's improving the results of forecasting process, improving but not as quickly as a budgeting process. For the budgeting process, we observed a real reduction in the cycle. But unfortunately, forecasting process is still quite time consuming. And you can imagine almost 40% of you spend more than 14 days, and there is no time for decision making. There is no time for changing the actions. It's really a long process. And this is the reason why rolling forecast doesn't work. If it's so long, then it's not value adding. I'm hiding the results. And now this is the timing for the last presentation for today. I would like to invite Eric Chung, who is a CFO at Unit 4, responsible for Asia region, to reflect on his experience. And what is very valuable, Eric is drafting the steps for implementation of rolling forecast in his current company, and they already achieved some results, but obviously this is a journey. Eric, you're welcome. The microphone is yours.
Thank you very much, Marisa. Good morning, good evening, good afternoon to wherever the colleagues are around the world. My name is Eric Chung. I'm the regional CFO at Unit 4. So just a bit of introduction. With Audit Flag is where my place of residence in the last 20 years or so. And you can see my work experience is surrounding all the tech company, because I do have a passion to use technology to be driving trusted business partner. And I believe it's only you can adopting from a technology tool standpoint that you can help through the process. Next slide. Today, I wanted to touch base more from a best practices. What are the considerations that we've gone through the journey in terms of consider how to implement rolling forecast. By no way we are comparing to Stefan and Matthias in terms of the maturity of the rolling forecast. We are just implementing a trial on the region, basically doing a 12-month rolling forecast starting from this year. I believe it's a long journey. It take a baby step to go through that processes. But what I wanted to really to touch on is basically what is important when you consider implementing rolling forecast, and I was summarized it into 4 pillars plus the business objective. And I'll just go through a little bit in terms of what is the important consideration. Next slide. I think the most important thing is start off with the business objective. What are you really trying to accomplish by implementing rolling forecast? Is that addressing the downside of the budget, which I think Stefan and Matthias have already explained? Is that really the not accurate, the static budget that you try to address that? Or is that really about rolling forecast is a continuous planning tool, which is involving cross-organization planning, everyone in a planning mode, rather than you use a budget, which is basically set a budget, forget about the budget, and then come down to forecast to actual variances. So I think begin with an end in mind is very, very critical, important pillar to consider rolling out the rolling forecast. Next slide. Now I wanted to focus, the 4 pillars, what we gone through that process. The first one is ultimately people. What I mean by that is stakeholder. I think Matthias has shared that, right? In order to be able to get the buy-in all the way from the user or the financial information, which is the board of director and the leadership team, I think we need to convince them this is the right set of forecast that we're using by using rolling forecast. But again, I think this is including all level business operation. It's not just a financial forecast. It's interesting that I still see some of the company that I experiences is that they're still using rolling the budget and then into become your latest forecast. If there's nothing changed, then become your forecast. So which is not the ultimate intent of the rolling forecast. A bit of more than that is also changing culture, because by implementing rolling forecast, people were still having a traditional mindset. Where's my budget? Can I spend? Do I have budget to spend? Which is, I think, fundamentally need to shift in terms of the mindset about budget and rolling forecast. So I think the people pillar is very, very important. is almost have to convince everybody that in the organization, especially on the top, that this is the right way to go. To touch on the process pillar, this is obviously talk about whether each of the business and company, I think, is unique in a way. Whether you are measuring using 12 months, 18 months, or quarterly. We heard Seven talk about 5-quarter forecast. So some company which is have a very kind of status annual recurring revenue, they might be tracking on a monthly basis for 12 months, and some company may be having a business cycle 18 months. So this is all unique factor that need to be considered, and there's no one size to fit all that type of module. The other thing is that it had to be focused on business driver rather than a static number. So it's not about you do $2 million this month and then let's do a indexation and then roll into the next month. I think what we need to focus is on the business driver. For us, it would be booking and the employee number that basically driving all the costs. Imagine you have an employee number, your cost would be quite different around the world. So you're focusing on the value driver rather than the actual status cost. So that more from a process standpoint. You can move to this next slide. The third pillar is relating to technology, which I'm passionate about, and I see that through from that somewhat evolvement from traditional kind of Excel move into enterprise-wide scenario planning using software. I think the key is that you really cannot use an Excel to do a enterprise organization planning. So it has to be synced with all the business unit, department, headquarters, with real-time data. So the only thing that you can adopt and using this approach is to have a software to help you from a technology standpoint. I think to give you an interesting perspective, we set a time frame from forecast, which is within 3 to 5 days. And what we did is that we open up for all the different business vertical, region, country to roll their input on that. And basically that, once you close the period, you'll be able to spend on real-time data enduring the result of the analysis rather than focusing on the accuracy of the data. So I think, you have a setup on the model which is based on, your headquarters, drilling into regional, drill down to country, drill down to vertical, different businesses and departments. I think the only thing that you can do that is with a powerful tool. I think that the last bit is about the world is changing. We are now, especially with COVID, people are logging in everywhere in the world. So traditional on-prem kind of software, it doesn't work anymore. You really need to have a 24/7 log on anywhere to be able to have a real-time data and interface with the data to get the best result, so that you can actually focusing on the scenario planning rather than to dealing with the accuracy of the data. Last but not the least is the technical bit. I think what I'm referring to is really the modeling. So you basically try to put less time in terms of the transactional data. What I mean by that, to give you an example, is that we have a model which is calculating what is our annual recurring revenue model. So it's starting with the opening base, what's your indexation, what's your attrition, and what's your booking, and then all you're focusing is now on the scenario. How much you input into the booking would generate what is the annual recurring revenue. So it's like a snowball model. Again, without the technology and the modeling itself, I think you would just be spending time crunching the data and then try to addressing the accuracy. The other perspective is obviously the accuracy of the data. Everyone need to be using the same cost center, unified ledger. You don't want to have different people, different country talking about different costs. When you talk about employee costs, what is that exactly is involved? So you need to have a unified head cost center to addressing, so that you are actually talking about the same thing. Last but not the least is about tracking performance and continuous planning. So rolling forecast in a way is a bit technical in finance term, but it's all about continuous planning. You wanted to get the organization to continuous tracking and planning. It's not about just the budget you set and forget, and then you try to addressing the actual to budget variances or forecasting variances on that. So yeah, that's basically what I wanted to share a little bit in terms of what are the considerations that we need to take into when we implementing rolling forecast. Thank you.
Eric, excellent presentation on and reflection on your experience. Thank you for sharing with us. I would like to ask our panelists to switch on the camera and to comment on this. And we will start from Matthias. So your quick reflection on the presentation.
Yeah, thanks, Eric. Great presentation, and I agree wholeheartedly with your assessment as well. That of course companies should use technology to their advantage to help be much more efficient in the forecasting process, be accurate, and use less resources, right? So all that time that you don't have to spend on kind of combining numbers, non-value added tasks, you can then use on actually making different decisions.
Thank you, Matthias. Stefan, your commentaries?
Yeah, I also like your four success drivers that you showed us how to implement successfully rolling forecast, especially the technology aspect. So you spoke it is impossible to make rolling forecast process by Excel or something like that. So yes, it's also my experience. If you just multiply the budget workload by, let's say, by 4 or by 6 per year, then you don't have the buy-in of your business to go into rolling forecast models. So it is really important that you support this process by a good technology instrument.
Thank you, Stefan. Thank you, Matthias. Thank you, Eric. Great presentations. And now, before we start our Q&A session, let me make very quick conclusions. Those are 8 implementation steps that were developed at our international FP&A boards in 16 countries. So altogether, we decided that those steps are important. And also, this is the conclusion from our today's presentations. So the first step, obviously, obtain sponsorship from the top. Diagnostics is important. Where are you now in terms of forecasting process? Identify the drivers, driver-based approach, so important for dynamics. Make your modeling and look at architecture of your process. Use advanced analytics and automation where you can. Design your rolling forecast around your process, and it's unique. It can be it can be the same for different organizations. It's about frequency, horizon, and so on so far. Use integrated platform for collaboration and execute and review your rolling forecast on regular basis, also collaboratively. So this is a conclusion from the meeting, and now this is the time for Q&A session. While our panelists switch on their cameras, I would like to remind all of you that it's a good idea that you continue to send your questions. We already have a lot of them, and I see that we wouldn't have time to answer all of them. But, just to warn you that those questions that we were not able to answer during this presentation online meeting, we will do this offline. We will distribute the questions between our panelists and we'll get back to you. So let us start from the first question. And Matthias, the first question is to you. Actually, there are a lot of questions to you, but the first one is very, very interesting. So when you have a budget for the year and incentives are usually based on this budget. How do you set KPIs for incentives and bonus calculations when you move to rolling forecast? Very traditional question, Matthias. So what would be your answer?
Yeah, it's a question we get asked a lot, right? So and it actually has a relatively simple answer. So instead of using kind of absolute figures that you would do in a budget, like a net profit or EBITDA number expressed in US dollars or something like that, you would set up much more in relative terms, right? So you would use then either an EBITDA margin, or even better, you would use an EBITDA margin compared to the market. So you would say the market normally returns X, and then you say X plus 2%. That will be then the target for our company. That's where we want to be. So it stays relevant, even though you would go through a COVID period. You could still have a relevant target.
Thank you, Matthias. Thank you so much. Stefan, the next question is for you. I'm heading the FP&A team, and my company, the company that does very detailed budgeting process, and CFO and a financial controller are reluctant to move to higher level driver-based rolling forecast. Any advice you can give to those people that meeting those problems, Stefan?
The advice I can give is just okay. Everybody likes to have first efficient processes, and second, you want to really focus on decisions you want to take. So if you just focus on decisions, you can simplify a lot of processes you have, because you're just looking, what do I really need for taking these decisions, and what's the best way to achieve at such decisions. So not focusing on the technical aspect of any processes, but on real management decisions. Then you can simplify a lot of things.
Thank you so much, Stefan. The next question is to Eric. Eric, how do you come from a bottom-up budgeting process to a rolling forecasting process? You're drafting your process right now. What would be your advice? What's the best way to do this?
Yeah, so that's why I think, to implement a enterprise-wide rolling forecast is a huge project. My suggestion is always, like what we're doing right now, is to take baby step. So we're piloting just a small region at the moment. You have to show some success stories. So right now we are basically carve out Asia Pacific to do a piloting. I think when you are running a small project, you are much more in control. So basically what we try to eventually do is that we're doing on a monthly basis. And then essentially when it comes to budgeting standpoint, we would compare by the end of this year, we'll have a 12-month rolling forecast detail. At the end of the budgeting year, we will compare those data. I think we need to convince the stakeholder this is the right tool to do. So I think start with a baby step is always the key, and start with a piloting project. That will always be the key success for me.
Thank you so much, Eric. I can see that more and more questions are coming, and please continue to do so. We will answer your questions after the meeting and send you emails. But now I would like to give the last question, and this is the question for every panelist, for all of you. So what is the most important key success factor for you for implementation of rolling forecast? Only one, the most important. Can we start from you, Matthias?
It's a difficult one, Larissa. Choose one, then it's buy-in, right, of the stakeholders, of senior management. I think without it, it's very difficult to do. It is more than just a process change; it's a mindset change, right? So they have to have the buy-in that they let go of some of the having one fixed number at the end of the year to allowing the business to change the number during the year as conditions change. So I think it's that buy-in and that methodology and a change of management almost of the company that is required.
Excellent, thank you, Matthias. Stefan, what would be the most important key success factor?
Yeah, I think it's quite similar. You have to convince the business, the management, that rolling forecast helps them to improve profitability, to improve decisions. So not focusing on technical changes and aspects, but really on improvements in direction of decisions.
Thank you, Stefan. And Eric, what would be your key success factor? The one most important one.
Yeah, I agree with Matthias. I think it's very difficult, but I have to pick one. Then I have to choose what I'm passionate about, which is the technology tool. Without the tool, you're really talking about a very complicated time kind of investing exercise. So I believe that you within the right technology tool can help you to do that. But I think every factor is important, equally important. But that's my choice.
Thank you so much, panelists. This is the time for us to conclude the Q&A session. And before we close the webinar, I would like just to remind our participants that we are running some very interesting events, and in particular, in partnership with AFP. We're doing this AFP FinNext Asia that will be on the 15th and 17th of June. And you're welcome to register absolutely free. So it will be really a very interesting FP&A related conference, and it will be online as well. While we still have passes, please can you register, and the registration page is here. Also, I would like to invite you to our upcoming meetings, Digital Pan-Asian FP&A Board on Art and Science of XP&A Business Partnering, and also we will be talking about combined power of human and artificial intelligence. The registration pages are here, the links are here, you can start registering. And also I'm inviting you to take part in our FP&A empowerment survey that we do every year. It's important for us to see how trends are changing. Please help, but also you will receive the report where you can check how you're doing comparing to others. And finally, before we conclude, I really would like to say thank you so much to our fantastic international panel. Thank you so much, Matthias, Stefan, and Eric, for being with us. Thank you for sharing this experience from different points of view and from different industries. Thank you so much for being with us today. I also would like to say thank you so much to all our participants for being with us. So please share their feedback, please stay in touch, share with us your experience, your case studies. We really would like to move together FP&A to the next level. And finally, I would like to say thank you so much to our sponsor, Unit 4, for supporting us, for making this possible to share this experience with you. Absolutely complimentary. And please share experience about this webinar with us, and share knowledge about this program with your colleagues. We would like to stay in touch. Thank you so much, and see you very soon, hopefully face to face. All the best. Bye-bye.
Thank you.
Thank you.
Bye. Thank you, everyone.